What's up, everyone? Dylan here. I wanted to hop on for another episode of the weekly analysis video. This week has the ability to be a very volatile one, as there's some key economic events as well as some key earnings reports that are occurring. Starting off with the earnings reports, there are roughly 180 S&P 500 companies expected to report this week, which makes up about 40% of the S&P's total market cap. Some of the notable companies that are reporting this week include Microsoft and Meta, which occur after the close on Wednesday. And then you have Amazon and Apple that report after the close on Thursday. In terms of the economic calendar, starting on Wednesday, you have PCE index. Then on Thursday, you have initial jobless claims, followed by the final U.S. manufacturing PMI. And then you have ISM manufacturing. And then on Friday, you have U.S. Nonfarm Payrolls as well. So definitely some key events. These events have the ability to change overall sentiment in the entire market. So again, definitely keep an eye on those days at those times with the earnings and the economic events. The bulls have been in complete control recently, as they have printed 5 consecutive green days in a row, something that has not happened in what feels like a lifetime in this Trump market. But what you'll notice is, let's go down to a 4-hour chart. What you'll notice is since the year-to-date lows occurred on April 6th, on the reopen on that Sunday, each subsequent low was defended where the bulls have been printing higher lows. Okay, not only have they been printing higher lows, but also higher highs. So we have been seeing a textbook uptrend. Okay, now by no means have we gotten back to get back all of the deficit from this year, right? The S&P is still down over 6% year to date, and we haven't even gotten back to the April 2nd Liberation Day on the S&P. So there's still a lot of work to be done for the bulls, but for the time being, in the recent weeks, the bulls have had some nice victories. So going forward, I would definitely keep an eye on that higher low pattern, right? This is the most notable one for the near term, as since that swing low was created, we have made another higher high. So as long as the S&P bulls are able to defend that low, they're definitely in a good spot, okay, in the near term. If the bears manage to break below that low, it can get a bit more dicey. So what were the reasons backing up as to why the S&P managed to go 5 consecutive days to the upside, right? There were some legitimate reasons for last week's strength, including Bessent saying the tariffs between U.S. and China were unsustainable. China also reduced tariffs on some U.S. import categories. Trump said that he has no intention firing Powell, and Q1 earnings so far have been better than feared. So again, there have been some legitimate reasons backing up the recent strength in the market. Okay, so will the earnings this week continue to be better than feared? Will those key economic events also be better than feared? Who knows? But again, it's very, very important to keep an eye on price action, as price tends to precede news. Okay, so one thing I wanted to talk about was the Tesla and Nvidia strength that occurred on Friday. Friday, the overall broader market was pretty weak. For the vast majority of the day on Friday, the Russell and the Dow Jones were red on the day, as well as, again, some of the overall broader market, right? The vast majority of the 11 sectors within the S&P 500 were relatively weak. But the two stocks that stood out were Tesla and Nvidia. Okay, so going forward, if that strength continues in those two names, right, Friday could have been earlier signs of a rotation of money going into certain names, it's important to keep an eye on those. So Nvidia actually closed down today because there was a report from Huawei, which is a Chinese semiconductor name, that basically came out with a new chip that is competing against Nvidia's chips, and basically there's fear that that Huawei chip will end up taking some of Nvidia's market cap away. So who knows? But going forward, a key Tesla level is this one here, where it basically double topped at. So the high of March 27th, earlier on in today's session, it managed to break above there, but it could not sustain value above. So going forward, if Tesla has some momentum built up and it's able to break above there, we could see 300 soon, which will be a net positive for the overall market, especially if you have some of the other mega cap names also participating in a nice move to the upside, aka Nvidia, Tesla, Apple, so on and so forth. So definitely keep an eye on those two names, as they were very, very, very strong on Friday relative to the other 498 names within the S&P 500. So if we do get an upside move, my answer has not changed in terms of what I'm looking for, right? What do I mean by answer? The answer I'm referring to is the one that I've gone over in the last few webinars, right? So I went over this in the last one, the fact that we did get a deadly cross on the S&P and the NASDAQ, okay? The first deadly cross since 2022 on the S&P, okay? In terms of pure probabilities, the first test at the 50-day moving average following a deadly cross technically has the highest probability of rejecting. So that's a very, very, very important area to look out for if it gets tested, which also lines up with Liberation Day. So any built up supply from Liberation Day, where that massive sell-off basically initiated from or triggered from, there could be some supply or some sellers that defend that general swing high area. So that lines up exactly with that 50-day moving average. So again, I expect that to be tough resistance. To the downside, I would look at this, okay? I'm going to look at this for the downside, which is a combination between the gap fill. I'm looking at NASDAQ futures, the gap fill stemming from Tuesday, right? Tuesday, April 22nd, which is basically a week ago, right? That gap fill lines up with this trend line. Okay, you could see this trend line, 1, 2, 3 tests, and then let's go to a 30-minute chart. You can see that those two areas line up pretty perfectly. So if we do get a pullback in the market before that S&P index gets to that 50-day moving average, if we do get a pullback and the S&P takes out this low that I talked about earlier, right, that would mean, in my opinion, that chances are the NASDAQ will fill that gap, which ultimately lines up with that trend line stemming from the year-to-date lows. So that's the key area to the downside. If that breaches, if the bulls fail to defend that key inflection point, it's no bueno. That's all I could say, right? In plain English, no bueno, or in plain Spanish, I should say. And then again, S&P. I'm looking at the cash. The 50-day moving average to the upside is very, very important going forward as well. So that's it from me. Short and sweet analysis going into a potentially busy week. I will talk to you guys soon. Peace.